All right, let's go ahead and get started. Welcome everybody to this week's stock market review for our Yummy Group. My name is Bennett McDowell with TradersCoach.com, and once again, great to be here. Okay, let me know if you can hear me okay. You should see my screen now. Let's make sure all the technology is working well here, and then we will get going. So just a couple of you let me know on that. All right,
you are
so
looking
let's see.
good.
Okay, we're looking good. Thank you. All right, so let's hit it. All right, so current conditions in the market today, we're up about 146 points. We've got, and that's on the Dow. The Nasdaq's up about 175. So not a bad day on the markets. The crypto is up a little bit. I do want to take a look at the crypto market. I still think we have a little bit more down movement in that, but it's getting better. Gold is slipping today. Silver is pretty much breaking even today. And oil has popped up a little bit today as well. So we'll hit those markets. And of course, if we have time, we can look at a few that you may want to look at as well. All right, so Jeannie, before I get going, anything that you want to announce today for our Yummy Group?
Yes, well, of course, we'll welcome everyone. And while we're all here, give me a hello in the chat box. So if you can find that on the screen, that'd be terrific. That just lets me know that you can hear the audio and you can see the webinar screen, and also that you found the chat area. So that's the area we will be doing questions with Bennett. So you can ask him questions and he will answer them. The other thing I did want to mention is we're actually considering switching this session over to the YouTube channel. For those of you that have been to Stock Analysis Friday, you know that we stream live there. And I'm going to post a link to where Stock Analysis Friday, where you can access that every Friday at 8 a.m. Pacific time. And Bennett, I think that's about it. Back to you.
Okay, great. Listen, I'm glad you mentioned about the YouTube thing. Yeah, so I think we're going to do that. Well, I guess, Gene, you'll send them an email when we're ready to do that. But
Yes.
it's easy to get to, and I think, basically it's instantaneous recording as well. So there's some real benefits of doing that. And, we post this anyway on YouTube. So I think it's a good thing to do. I think that'll make it better and easier for most everybody. So that is in the works. Okay, so let me get going here. All right, we're together about a half an hour here, so I got to kind of move along here. All right, first thing, of course, are the risks involved in trading. I think we beat this horse to death, so to speak, right? I think we all know there's risk involved in trading. Check with your financial advisor or accountant or whoever manages your money to be sure anything that we talk about today is suitable for you to act on. We don't know your personal situation. Let's hope they certainly do. They certainly should. And everybody's tolerance to risk, their personal financial situation, even your age comes into making that determination, and they know all that. All right, so let me see what else. Of course, know how to do risk control. We've got a couple books on that. And trade with money you can afford to risk. I think those are the most important aspects, and realize that trading is all about probabilities. So you always have to protect your downside. All right, here's my books on money management. And excuse me, somebody saying something? Is somebody saying something?
I think Frank's mic is on. I'll take care of that.
All
so
right.
Frank, you
Yeah,
might
just
want to turn
mute
your
out
mic
everybody for right now. Thanks.
Yep.
Okay.
Will do. And we're recording, yes?
Oh, yeah. Okay, so books on money management are available. We have books on technical analysis. My new book, The Art of Trading, coming out this year. So those are all certainly in the works. All right, so we start with Wednesday today, January 24th. No FOMC minutes. All right, a little bit on the FOMC and the interest rates from what I've been reading out there. It looks like most likely we could get a rate cut in May, possibly March. I think they're leaning more towards May. A couple of weeks, the Fed watch percentages, bounce up and down as much as a stock trade. It's pretty, they were like 84% that we'd get a rate decrease in March. Now that's dropped down last week to 42% or something, 45. So it's been bouncing around a lot, higher for a May rate decrease. Now, there's some talk out there that, they may come down, maybe a small, maybe 3 times at the most this year instead of 6, which was forecast. Some people don't even think they'll come down that much. They won't go up, but they may not come down that much. So we'll see what they say. The consensus on it fluctuates so very, very much that I think you have to wait until you get a little bit closer on that. All right, NBA mortgage apps come out every Wednesday at 7 a.m. These are all Eastern times. PMI, EIA petroleum status, survey of business uncertainty. That's a good one. All right, Thursday, January 25th, durable goods orders, GDP, international trade in goods, jobless claims, wholesale inventories, new home sales, EIA natural gas report, Fed balance sheet. Thursday always tends to be the busiest of the economic announcement days. All right, Friday, January 26th, personal income and outlays, pending home sales index, Baker Hughes rig count. We'll talk about home sales in just a little bit. All right, here's the software that we use when we look at charts. We have it on our website. We have videos on our website on how it works, so you can check that out on your own. All right, so here's my chart that I did on Sunday, January 21st. We're still working our way up to that wave 5 target zone. I do anticipate a pullback pretty soon at this point. And not a pullback that I would consider a major change in trend, however. A pullback for some profit taking. We've been moving up since October, and it's time for a pullback. It's time for a little profit taking. And so I think we're kind of due for that at any time. I don't think I would panic when it comes, but I do think you need to be ready for it because we could see prices dip, and I'll just draw in basically where a fib area is. I'll show you another chart where it currently could go. But right around that area here, we could get a pullback to here before it takes out the high again. And I do think this bullish movement we are in right now will continue up until we get into that wave 5 target zone, whenever that is. Probably maybe latter half of the year, maybe end of the year, that type of thing. We'll have to see how this progresses after the pullback. But I'm pretty confident we'll get up into that target zone, which is around 40,141 up to 47,238. Give a little bit here and there, depending on the accuracy of the draw in I did on the fib extension. I try to do as accurate as possible, but you know how that goes. All right, so it's that target range someplace in there is where I think, and that will be the completion of this fairly significant bull run that we've been in now for almost 14 years, going maybe on 15 since 2009, right around there. So quite a ways. So when we get there, that's significant. We're not quite there yet. If we sell off from here and catch us by surprise and the thing just dumps below this support level here, then we can consider that a kind of a failed wave 5 and we're heading down. But I don't see that happening. That's a small probability it could, but it always is a probability that it could. Let's just leave it at that. But in any case, keep an eye on that. And if you keep coming here every week, we'll track it along. And when we get there, and I think it's something you need to worry about at that point, I'll let you know. So I think probably from what I see, any long positions, you should be pretty happy with those. You will get some profit taking. If you're trading the swing that we've been on since October, you probably will get out when the profit taking comes. And maybe your long-term positions you can hold then until you get to that wave 5 target zone. So that's kind of where we're at now. Unfortunately, when we get to wave 5, that means we're going to be at the top of a wave 3 now on the weekly chart, which we thought we were in 2023, but we were not. So now that means at the end of wave 5 here, we go into a long-term major correction on the weekly chart. And what does that mean? Probably a 40 to 50% drop in the markets at that point. I don't see that happening right now. It is an election year, so election years are kind of weird. All right, anyway, so we'll see. Sometimes things can get pushed back until after the election because they don't want a bad market before the election. And if you don't think they can manipulate it in some way, form, or fashion to do that, you're probably mistaken. I think they can pretty much manipulate just about anything through the Fed. So we'll see what happens with that. But anyway, that's where we stand now. All right, so that's kind of the daily chart. And if we look at this 60-minute chart that I brought up here, for the simple reason that if we went into a profit-taking approach at this point, we'd probably end up back into that target zone where I have it highlighted as the profit-taking pullback zone, and that's really between 36,382 down to 35,406, somewhere down in there. So we'll certainly see. But we're, more highs we're seeing this week, so I'm going to have to redraw this up a little bit. The higher the market goes before the profit-taking occurs, the higher this zone goes for profit-taking. And as you can see, the software tools were indicating more bullishness probably this week, and that's exactly what we're seeing this week so far. Okay, so there we have it. All right, if we go into the S&P 500 market, we did break the high, which we anticipated doing that. Here's the high back in 2022 on the far right. We breached that, and this too has a target zone similar to the Wave 5 target zone on the Dow Jones Industrial Average. So we're kind of heading on up here, and then we'll redraw this up here this week to get the new pullback area when profit taking comes in. So, we're getting closer and closer as we inch our way up there to it. So unfortunately, the big sell-off that we were anticipating, or fortunately, depending on how you look at it, the big sell-off we were anticipating in 2023 has been delayed. So it's not a matter of it going away. It's just delayed. So it's not a matter of if, it's more of a matter of, once again, when. All right, NASDAQ on a tear as well. And, these are you can thank your big boys in this, your Googles, your Amazons, all your big tech stocks doing well. And again, the target zone here is above. What's interesting with the NASDAQ, though, is as of Sunday, we still haven't broken the 2022 high. We should do that, all right, at some point. I would say this, maybe this quarter, maybe this first half. Again, if we get a pullback, I think in the overall markets, we probably would see it here too. We're starting to see a little bearish divergence, but not much. So I imagine we'll break this high here, all right, pretty soon, and then maybe we see a more profit-taking correction. We're just going to follow it up until that happens. All right, and then our housing market. Boy, my red line's not very red, is it? This red line, which I don't know if you can see that. I'm surprised it's so light at this point, is the Case-Shiller, all right, index. And this measures the housing market. So now I'm shifting from stocks to the housing market. And on this situation here, it is basically plotted against the CPI, which is the Consumer Price Index measuring inflation. So the bottom line with a chart like this is that if you believe in history and you believe that the Case-Shiller Index and the CPI during normal markets tend to move relatively in sync, all right, then you can certainly see at times when the Case-Shiller breaks away from the CPI, you get a correction back down into the norm like you did here. Now, this was the 2008 financial crisis. And notice how far the Case-Shiller reached above the CPI there and then corrected. Now, we're not taking into account at this point incomes, okay? This has nothing to do with affordability index. This is just the Case-Shiller in relation to the CPI. All right, so it moved back down. The correction ended. It started sloping back up very quickly. You can thank lower interest rates, and then took off here when COVID was here because you had stimulus money, you had the lowest of low interest rates, and you had people remoting to work from home. So a lot of people were looking at homes in the suburbs to get away from the big cities during the pandemic. And so housing took off, and housing is still taking off. And notice how the CPI, notice how inflation increased here. Okay, that's kind of a neat thing to see. So if housing didn't butt up so much here, All right, it may have had a slight correction and then move up, but the CPI, even though it moved up, real estate moved up much more, okay? Dramatically more. And so now we're at a situation where we have even a bigger bubble than we had during the 2008 financial crisis, okay? So, again, if you don't go by the classic saying, times are different now, but instead rely on history to bring things back into the norm, you've got to be prepared at some point for a correction in the housing market. And to get back into that norm, I think you need a 40% correction. Now, it might even be 50. It keeps going up so much in relation to the CPI to bring it back into a normal area. So that's a pretty significant situation to keep an eye on. So again, like the stock market, I don't think it's a matter of if, I think it's more a matter of when. And so we will certainly keep an eye on this. But so far it has not fully, the bubble has not fully busted. Now, in some localities, you can see it coming down more dramatically than others. Real estate's a very local type of business. And at this particular point here, that's a heck of a spread. Now, we've looked at the CPI. Let's take a look at how housing is doing in relation to incomes. Now, this chart has not really been updated since for about maybe, well, I'm going to say maybe 6 months from now. 6 months ago, this was last done. This is done by a company called RE Venture Consulting, and it's kind of a neat little table they put out here. Let me increase it so you can see it a little better. But in a situation like this, what they've done is they plotted real estate prices in relation to average incomes. And every time you see this situation where pricing here gets red, it's a multiple of how high home prices are in relation to the income that they're plotting. And the darker the red, the more extensive this relationship or discrepancy between the two are, okay? So at the time this was done, home prices are 31% overvalued. I think they're more like 40, 45 right now if they redid this chart. And I'll check and see when the next time they'll redo it. But this chart goes back to the 1970s to 2023. And again, prices do correct after bubbles, and that's the way the market should work unless there's outside forces influencing something that shouldn't be there. But in any case, this is showing, just like the CPI in relation to the Case-Shiller, a very dramatic discrepancy, and a correction is due. So now you have two supporting tables here, one representing the relationship of home prices to inflation and one representing it to incomes, both showing the outcome is a correction. So you got to be careful about that, all right? So nobody has a crystal ball of knowing exactly when it will come. Maybe it'll come when the market drops, whatever causes that, and maybe layoffs and things like that. So, everybody by now has heard that, as long as supply is shallow, you won't have a decrease in prices, but something may come along to increase supply. And we'll see. Interest rates come into a factor here, but I think more you got to be concerned here with who can afford these homes. If you're a first-time home buyer, you're going to be forced to rent, and that's basically the bottom line. If you've been fortunate enough to be in a house for a number of years to take advantage of this extreme appreciation or bubble, then you could sell out of that and buy something else and have enough cash to do that, even if you have an income that's not extremely high, all right, because you can put a large down payment on. So we'll see, but I look at the housing market as a very interesting market that is in a bubble right now. If anybody's a realtor out there and has another viewpoint, feel free, of course, to share that. So that's kind of what I wanted to go over so far today, and now I want to drop this and take a look at some of the longer time frames and just take a look at a few stocks. And I want to start with GBTC here. All right, so let's run this over here. And what you're looking at here are some of our scanners at the top, and I have three charts here. A short-term chart called the 60-minute chart here, daily chart, and a weekly chart. Most of you that are here know this by now. But as you can see, GBTC, if you recall, we initiated a buy on this back when it was below 10 bucks. And now we put a hold on it because we were kind of thinking, you know, boy, we had a number of our pyramids in a row. And when you have this many in a row, all right, you are in a mature trend. So we're due for a pullback, and we're getting it. And we're in it right now. And we haven't quite reached the pullback profit-taking target, which is right here. So we got a little bit more to go. So if you miss this big run up, I think you're going to have another opportunity when you get into here on the crypto market. All right. And you know, many ways to participate in the crypto market. If you want to keep it simple and just buy the ETF GBTC, hey, you can do that. A lot of people don't like to do that. A lot of people would rather use a wallet. Okay, whatever. Or the futures market, doesn't matter. But they're all kind of in a process here pulling back. But I think you may have a good buying opportunity once this pullback ends. I'm very bullish on this long term. I think we'll get above 60 on the GBTC and possibly even a lot higher. We'll again analyze it if we do get up there. So there you have it. But we have a green PTF, and this thing has a 75% accuracy rate, saying we should take out the all-time high on crypto at some point. Not next week, not tomorrow, but over the next maybe few years, okay? All right, so we'll see how this pullback goes, how quick it ends, and then we'll have a better idea on the next move up. All right, and let me just take a look at a few others in the crypto market. You know, another popular one is Coinbase. This is another one we like, but this is also, all right, experiencing a pullback. So on the 60-minute chart, all right, we haven't quite gotten into this area here for a pullback, and it's got a red PTF, so I think a little more downside on coin. I wouldn't go into it right away. And we do have bullishness on the longer term charts once this correction's over. So again, this gives you an opportunity to participate in it again if you want to. Check with your financial advisor, see if this makes sense for you. But I think all the cryptos, all right, are basically going to do well regardless if the market goes up or goes into a severe correction. So I think that's something to keep an eye on. Now, I would not bet the farm on cryptos. Okay, be careful about that. Make a smart trade size, so to speak, on it. But because you know, a lot of the governments around the world want their own currency. Okay, and so who knows how this is going to play out eventually? But I do think crypto is going to do extremely well. There'll be some that don't. All right, this is RIOT, which is the blockchain mining company, also coming down. I'm bullish long term on this. This is kind of giving you a really, I think, excellent entry here because it really didn't go up as much as Bitcoin, but we have that green PTF sitting on the far chart, on the weekly chart on the far right, indicating that it should start to move up pretty good after this move down completes. So you may want to take a look at that one and come here every week and we'll keep an eye on it. All right, next one I want to take a look at is USO, okay, USO. This is the ETF for natural gas, all right, and I'm going to open up the weekly chart for just a moment, focus on the current situation here. All right, so we had a nice move off its bottom back in 2020, all right? Then we've had a settling down since then, since around mid-2022 to 2023, almost a year it's come back down. Now, the million-dollar question is this a retracement bottom here? So if this is an impulsive wave, a minor 3, 4, 5 target on the next move up, then we should see something like that. And let's see if this little bottom holds here, okay? So far, it's looking pretty good there. So if that's the case, and we have another move upward, like I think we'll have, then we're probably looking possibly at oil getting to 99 to 124 on the ETF, okay? And that means it'll be pretty much across the board. So we'll see. All right, we're seeing some green come in the lower time frames. We no longer have much red down there. So I'm thinking it's looking like it may be bouncing back. We're not really going to know for sure until we clear this high here, because it could go into a sideways channel. But one thing, let me open this back up. One thing we did have in favor of bullishness is we took out this peak. So we had a bottom here, we had a high one here, okay? We had a low one here and a return to the upside there. So that's a good sign overall. Let me just check something here. I thought the pyramids were missing there. Must have removed them at one point. Okay, so we'll add those back in. All right, so in any case here, that's kind of what we're looking at there. And let me just refresh this chart and get those back. Okay, so there are the pyramids there, okay, on that chart. All right, so that's USO. Couple more I want to look at. One is natural gas, ETF, UNG. And this one has been all over the place, okay? Looks like I got some weird ass bars up here that make no sense, but okay. Let's refresh, reload historical data on that. There you go, okay. So this one here, all right, made another low recently, all right, and we can certainly see it's bounced up there. Got a little bit of red now that's turned to green here. That's a good sign. This red turned to green. I'm happy to see this. All right, let me remove this. All right, so I'm waiting to see on UNG if we have a bottom. This could be a significant bottom here. And we're getting close to going green here. This changed, this changed. So I'm kind of liking what I see here, okay? So let's give it a shot. Again, it's attacking the bottom. It failed to take it out, but it hasn't also had a higher high of significance yet. So we could be in a channel. I don't want to put anybody in when we may be in a channel, but I kind of think we're going to get a rebound from there. All right, TLT is the last one I'm going to take a look at here. Oh, I'm going to take a look at silver too. So TLT is a situation where these are the bonds. And again, many times, this we thought at some point was a bottom, but the red PTF said it wasn't. And now it turned to yellow, indicating that that indicator has gone neutral, but we have a red one over here. So I got to stay out of TLT. No, I don't think it's quite bottomed yet. We will see. We got to wait for some things to be more bullish on this one. And then silver, SLV, which is another popular one. This one's range bound, guys. All right. I don't see any rush in getting into this yet. I've got a pennant drawn on the weekly chart, and we've got a green PTF on the daily, which is bullish. All right. But the PTFs are saying there's a 75% accuracy we'll get above this point right here, which is the highest high in the bullish area. What the PTFs don't tell us is when. So if this thing goes into this type of range and then goes, that's great, but you don't need to jump into this at this point. We also have a red one over here, which indicates before a bullish move, the lower time frame says we're going to go down a little lower. So I would stay out of silver, okay? If you're a long-term person and you think there's a fundamental need for silver at this point, which many YouTube influencers say silver will skyrocket, and you want to trickle into it now, go ahead, but I don't think you're going to get a big move on it quite yet. And I think from a trading standpoint, we can do better by waiting until the momentum is going with us and then get in it. And that way your money's not tied up idle for a while. All right, gold. Let's take a look at the last one here, gold. A little pullback. We have more highs coming in gold. Target on this is possibly as high as 197 short term. I think maybe even 210 this thing could get up to, and this will be the final high on gold before it turns south. So maybe it will start to move up when the markets move down again. We'll have to wait and see. All right, so Jeannie put a link up in the chat area for everybody for our YouTube channel. Jean, when do you anticipate us moving to YouTube for this event? going forward?
Well, I mean, we could maybe do it for next week. What does everybody think?
Well, it's really kind of up to us and when we can move it over. So can you be ready to do that next week?
Yes.
Okay. Well, then let's do it. All right. So so next week, what you want to do is you want to go to that link Gene put up. So copy that and paste it. All right. You won't need a code to get in. All right. It'll be open. And I'll go ahead and after this one, I'll go ahead sometime today and go ahead and set it up so you can join. Well, you can join you can subscribe to our channel now. And then what I'll do is I'll put a notification up so you get alerted if you hit the little bell there on the upcoming event for next week. So I'll get that up later today, and then it'll be all set to go. Okay. So great. Okay. So there is that.
And of course, I'll send emails so everyone will get a reminder as well.
Right. Okay, good. All right. So there it is. Now I have client support coming up in about 25 minutes. And that's open for all our clients. That also is a live event that I do for our clients if they have any questions on software, trading, courses, and things like that. So please attend that. If you certainly have any questions, and we do that every week because that's a nice way to do it. Also, too, I posted some things on the forum in the client support or client VIP area regarding accessing free data on Ninja if you need it in the new platform. It's a little bit tricky, so there's some steps there. And one of our very nice clients, Lewis, gave us the rules on how he does that. So that's in there for everybody to benefit. So thank you, Lewis, once again for doing that. All right. And for those in the day trading room yesterday, what a turnaround. Okay. We had a loss on copper. We went long on the MES contract and literally held it until we were stopped out that afternoon. And it was a big win. So it turned the day around. So good times in the day trading room, and the returns are doing really well in that. All right, so we will see you next week on our YouTube channel. All right, and if you're not a subscriber, please subscribe because you need to subscribe in order for you to have access to the chat. So if you go to that link, definitely subscribe to the channel as well. All right, thanks everybody, and we'll see you next week. Gene, back to you.
Serving traders worldwide since 1998, TradersCoach.com provides educational services for traders and investors alike. We have developed trading software to help traders of every level improve their skills. Our site is dedicated to providing you with all the resources, software, and educational material you need to achieve your trading goals. It is because of our years of experience, attention to detail, and our exceptional customer service that TradersCoach.com is the right choice for you. Call us today.